Well, tax season is in full swing, and like many things this year, we can expect a few changes. So what has changed during the pandemic for taxpayers? Joining us now is Ariel Giroux-Kleiman, Associate Professor of Law at University of San Diego. Ariel, we appreciate your time and we appreciate you being here with us.
Oh, thanks so much for having me.
You know, a lot of people wondering right now, there are a lot of things that have changed. What are some of the major pandemic-related tax changes that we can expect this year? And are there any tax credits that families can take advantage of?
Yeah, so there have been some changes. I'm sure most folks are aware of the rebate checks or the stimulus checks that Congress authorized last year. So a lot of those have been sent out already. But if a taxpayer hasn't received their check yet, or if someone thinks that they might be eligible for a larger amount than they got, that's something you can claim on your tax return. So that's something people should be aware of. Congress also just very recently in the American Rescue Plan enacted a rule that exempts the first $10,200 of unemployment insurance. So if you got unemployment insurance in 2020, the first about $10,000, $10,200 is exempt from tax if your income is below $150,000. So that's an important change for anybody who got unemployment insurance in 2020.
That is good.
And then there were also yeah, very helpful. And some small changes to how the EIT, the Earned Income Tax Credit and the Child Tax Credit are calculated. So if you claim one of those credits, you should talk to your tax preparer about how those work.
Well, also, I mean, obviously we are seeing those kinds of changes, but what is the one thing that you want people to be aware of or even consider before they even start their taxes?
So one of the big ones that we're looking out for and that people should be aware of has to do with if you work in one state or have worked in a different state and now work remotely from home in a different state than you were working in. So, this is somebody who might have commuted to work somewhere and now is working remotely at home. In a situation like that, there's a chance that you could be subject to tax in both states. It could get quite complicated. So if you're in that situation, you should really make sure to check in both states whether you might owe income tax in both of those places.
And absolutely a situation that happened to so many people during this pandemic. What resources are available if people can't even afford to pay their tax liability?
So if someone can't afford to pay, first of all, always better to file a tax return and work with the IRS. It's never a wise idea to not file the return. If you can't pay, you can call the IRS and you can ask for an installment payment plan. They can work with people to put together monthly payments. They can even put people in a temporary non-payment status if you're going through a severe financial hardship, which a lot of people might be eligible for that right now. If you would rather work with someone outside the IRS, there are organizations called low-income taxpayer clinics. You can look up online IRS low-income taxpayer clinic, and you can find people there that are able to help. And then there's also something called the Taxpayer Advocate Service, which is a office within the IRS, but is there to help people who are having tax problems.
And I just thought of something. Obviously, we're talking about people working in different states and getting possibly taxed that way as well. A lot of people who work from home actually purchase things like new desks, computers, and chairs, and lights, and everything else. Is any of that tax deductible?
So it depends. If you are classified as an employee, then unfortunately you can't take any deductions from your employee income. So the answer for employees, unfortunately, is no. If you're classified as an independent contractor or you run a small business or you're self-employed, then generally, yes, you can take a deduction for those things or you can depreciate those things. Some things have specific rules, like computers. You might have to use it a certain minimum amount of time. So if you're in that situation, again, you should talk to your tax advisor. But so yeah, if you have a small business, you should be able to take deductions for some of those things.
I think it's an important conversation that we have to have, and I'm so glad that you joined us today on the Fox 5 News at 4 o'clock. Ariel Giroux-Kleiman, we thank you for your time and, of course, your insight. Thank you for breaking it down for so many people who are probably struggling right now trying to figure it all out.
Oh, of course. Thanks for having me.